Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, June 13th. Ladies and gentlemen, this could very well be squeeze week. At minimum, a gamma squeeze, possibly short. We don't know yet. But as always, the apes are winning, the diamond hands are winning, most importantly, the retail investor is winning. So if you like this video and find it informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I would appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. Means the absolute world to me. Thank you. Start with a quote. Absorb what is useful, discard what is useless, and add what is specifically your own. By Bruce Lee. No doubt we will be under heavy attack this week. Rely on the facts, ignore the FUD, ignore all of the misinformation, the misdirection. Wherever it comes from, believe in the facts, believe in your process. So I want you to look at this picture. Most of you probably don't know who this lady is. Her name is Annie Malone. Annie Malone was one of the very first African American female millionaires in the United States of America. An extraordinary story. Annie Malone developed and manufactured her own line of non-damaging hair care products and they revolutionized hair care for all African Americans. In 1920, she was a multi-millionaire. So if you just think about our journey with AMC stock and what Miss Malone likely went through to become a millionaire, it pales in comparison. But it also gives you conviction and hope. Because if she did not certainly believe in herself and her vision, she certainly, I believe, had far more obstacles than we ever had, especially being born in the late 1800s, early 1920s. She became a millionaire. To develop that vision with the obstacles that were in her way certainly is an inspiration, I think, to each and every one of us. So this week, as we are under attack, as we see red candles, short ladders, whatever it is, just try to remember Annie Malone. So let's get juiced up. I haven't shown this very often, but pre-timing. The pre-timing report is a forecast of AMC stock. It has been fairly accurate over the last several months. If you look going over the next few days, couple of weeks, it's a 10-day forecast. You can certainly see over the next 10 days, it is no doubt showing an exceptionally bullish run. I believe we all agree with it, right? So let's look at crypto. Crypto this morning is mixed overall. Bitcoin is up, Doge is up, Ethereum up, Litecoin up. Overall, not a bad morning, right? So a lot of discussion around quadruple witching this upcoming Friday, June 18th. It does not make or break, but let's certainly look at what AMC stock did at the last quadruple witching date of March 19th. So this is the chart from Monday to Friday, open to close that week. You can see on the left, we had a major gap up on that Monday. We ran up, got shorted down a little bit, but eventually hit our more recent high before this current run up of $14.54. It was a major milestone for us to break that level. It was well documented. We discussed it many times, but you can certainly see that week was exceptionally bullish. We came out of the 8s and 9s that previous week. Let me show you what that looked like. So you can see where we came out of the 9s, and if you look where I have the yellow arrow, it is certainly reminiscent of this past Friday. So that is Thursday and Friday of the week leading up to. This is the hourly chart. You can certainly see a correlation to where we are currently. You see that on Friday, that big green candle, that kind of led to a bullish run in the afternoon, right there. And then we had the major gap up on the following Monday. So this is how we closed the last couple of days of this previous week. You see the red candles being shorted down. Then we had that miraculously beautiful green candle around midday Friday, and then we ran up for the afternoon closing at $49 and change. I believe we are set up very, very similarly going into this week. So I just want to show you a few very bullish things that are going on behind the scenes. Most of you probably are not aware of. If you look, this is Rocket. So look at the difference in the options chain from expiring 6/11 to 6/18. It is a huge, it's over a $20 increase week over week just in the calls at the strike prices. Absolutely huge. This made me scratch my head for many, many hours, and I still can't figure it out. Expiring 6/11 this past Friday, Apple was at $180. This Friday on 6/18, bar chart is showing an expiration strike price of $1,000 per share, and there is open interest at that level. Take it for what you will, but it certainly seems like the market makers are expecting a huge pump throughout the market. And again, look at the extraordinary amount of open interest this week. Now, these are, monthly expirations on contracts, which usually you will see a larger volume, a larger open interest. But just look at the amount of calls and puts expiring this Friday on Apple. Certainly something is up. And again, another look, Apple, based on my Fidelity account, is only showing a $250 strike. It may adjust tomorrow. Webull is showing the same at $250. But clearly something is bullish going on there. And I'll leave it at that. AMC Party trends on Twitter, hashtag AMC Party. It has been going on. Again, huge bullish sentiment around the stock this weekend. I believe tomorrow is going to be absolutely phenomenal. So let's look at how AMC did over the last several trading days. So one level, that red line is a line of defense for us. It's that $40, $42 level. We have held support at that since our major run up over into the 70s. Around 40 to 42 has been attacked many, many times. As you can see, we have bounced off of it, including on Friday. Our next level that I believe we need to break through is around that $50 level. It should be pretty easy, and we may even gap up pre-market above it. That is my anticipation. The next level I believe we need to break is that $58, $59 level. They have defended it heavily. As you can see, we have touched it. I believe I counted 12 times over the last week or so. We clearly need to break that. I believe that is a huge, huge barrier. Once we break that, we'll be into the 70s in no time. And then obviously breaking the $70 level is going to be absolutely huge. That may very well set off a squeeze of some sort. So we have a very, very important week. It is not the end of the story, but merely the beginning. No matter what happens, we are certainly in the driver's seat. So let's look how AMC did on Friday. Obviously, everyone's seen this by now, but we had the huge run up in the afternoon. Certainly bullish, probably a lot around the credit rating increase as well as the maybe a little bit of delta hedging, what have you, but it certainly leads me to believe this week is going to be exceptional. We closed at $49.40, up $6.50. Clearly bullish, fantastic way to close the week, setting up beautifully this week. And we, as always, we were the most active and the most popular. Again, after hours Friday gave me the most bullish sentiment, me personally, that we did not have a major sell-off at the end of the day as usual on Fridays. We held support, we held strong, we did not skip a beat. Again, the chart would show that we are now, moving average is certainly in a bullish direction. MACD is just beginning a bullish crossover, and this is on the 1 hour chart. RSI is beautifully set up in neutral, but heading in a bullish direction. So let's look at this. So overall, 4-hour chart, you certainly see again moving average is moving back in a bullish direction. We are now touching the signal line on MACD. RSI is beautifully set up in the neutral channel, which means we have a ton of room to run this week. So let's look at the daily chart. So that red candle was the previous close of previous Friday. We closed above that, yet another winning week. No doubt, MACD is certainly in a bullish direction. RSI again in the channel, moving in a bullish crossover direction. And over the last 3 opening Mondays, Tuesday, if you include the holiday, we are 16.7% as an average over the last 3 opening days of the trading week. So weekly chart could not be more beautiful. We certainly are walking our way right up. MACD is certainly bullish. RSI had to cool off a little bit. We're still in somewhat of an overbought territory, but not to worry. But you can see we are clearly stair-stepping our way to the promised land. GME had itself a fantastic recovery day, closed. We need GME to do well. I'm expecting a bullish week for. So let's look at their little scare tactics here. So if you recall, I'm sure you do, the 95% run-up day. Pre-market, we got up to $77. They decided to hit the sell button and sold us off all the way to $37. No doubt some people got scared, sold out, thought the world was ending. But if you look kind of at a bigger picture here, this is the 30-minute chart. You can clearly see this is all designed around fear. This is not normal selling. It is not normal price action. It is not in any way, shape, or form normal. And this also predates the fact that the SEC officially disclosed that they were watching the quote-unquote meme stocks and the big banks suspending lending, loaning shares to the hedge funds for these quote-unquote meme stocks. So this was their Hail Mary. They tried to shake a lot of people out of their shares, but as you can see, it bounced and recovered. That was controlled, that was calculated and predetermined. They had no intention of doing a sell-off because they can't. It was merely designed to scare you to death, especially after such a large run-up. But as you can see, we found our support yet again at the $40 level, even after that attack. Throughout the remainder of the week and days subsequently after the fact, you can see we hit, we bounce. So I have a lot of confidence around that $40 to $42 level. They are going to try to press it below there. They may very well achieve it tomorrow morning. Who knows? But it's coming, folks. But let me show you each and every day, pre-market, they try, then they do a heavy sell-off, then it recovers. Heavy sell-off, then it recovers. So you look a little closer here, it's all pre-calculated. It is designed to scare you. Just look at the one day we sold off, went to $37. They had to buy it all back because it was a game. Then they created yet another sell-off just to make it look like, oh, sorry, we were wrong. This is all very, very calculated. Just hold your shares, not financial advice, certainly, but again, we know what they're trying to do. This is what a sell-off looks like. This is Viacom. This is Archegos. This was the margin call. This is a sell-off. This is AIG during the housing crisis. $1,738 down to $2.95. That's a sell-off. By closing the week very, very strong, we put 90,000 calls in the money. That could really set the stage for a beautiful Monday as always, but rising up at the level we did and as fast as we did on Friday afternoon obviously set us up beautifully for Monday, without a doubt. Bullish sentiment still on the options exchange, without a doubt. This is where everything is going to win or lose this week, is around the options exchange expiring June 18th. We are clearly have a lot of calls in the money. 414,000 if you include the puts. That puts us over 450,000 at the current price. If you start adding where the heaviest open interest is above the strike price where we currently are, again, these are the highest levels of open interest. If we get to $73, that puts another 140,000 contracts in the money just on the call side. So again, I spun this around bigger picture. This is filtered by open interest, largest to smallest. Green is already in the money. Yellow is above our current strike. You can clearly see how important those levels are. Getting just to 50 puts another 24,000 in the money. We get to 60, another 23, 59, 20,000, and so forth, and so on. So again, each and every dollar is critical this week. So let's look at GameStop. So GameStop expiring this Friday the 18th has gone up $100 from a strike price from $585, I believe, to $680. Clearly, the market makers are expecting a rise. Again, very, very bullish. As you can see in the options chain, a lot of open interest at various strike levels, but most importantly, a $680 strike for GME expiring this Friday is huge. That is nearly a $100 increase week over week. So let's look at IWM is an ETF major holding for AMC as well as GME. This past Friday, June 11th, the expiration on the options was $285. This Friday it is $340. To have that large of a jump on an ETF is extraordinary. It is very hard to move an ETF, and as a matter of fact, over its pretty much its lifespan, going back to 2010, it has never been any higher than pretty much it is currently at $234. You do your own due diligence, but something just seems very odd in the options chain. A lot of market makers are expecting a lot of bullish sentiment this week, it would appear. Again, AMC is held by 32 ETFs, IWM being the largest holder, as you can see below IWM, and the highest exposure allocation-wise is SFYF SoFi. So again, do your own due diligence, but as you can see in IWM, AMC is the second largest holding in that ETF. GME is number 5. No doubt they run together. So let's look at a couple key facts. There are 301 million shares outstanding. Well, they've decided 143 million are worth shorting, estimated short interest, which puts that at 48%. So let's go by, take a quick look. This has not changed obviously since Friday, but overall, short interest is increasing. 213 million was our volume Friday. I expect some pretty wild volume this week at different times. Currently 1.5 million shares available to short. Take that for what it's worth. But certainly we are going into a very, and as always, I have skin in the game just like you. Friday was a great day. I'm expecting to add to this lovely total, as I'm sure you are as well. Let's close with a quote. The supreme art of war is to subdue your enemy without fighting. From the book, The Art of War. We clearly use buying and holding, certainly not financial advice, not a financial advisor, but that is our best method to fight off our opponent. It is clear we have gained substantial support. We are holding that $40 level as a line of defense. It appears to be working. They are the ones who need to cover. They have not done so yet to their own demise. This is a war, a battle of psychology, of financial resources, but also a battle of conviction and ego. Clearly, their egos will not allow them to accept defeat, which will only make the defeat all the more painful. So as always, I want to thank you for watching. This is going to be a fantastic week, I believe, but it is not the end of our journey, but certainly another chapter in it. As always, have a great weekend. Thank you for watching, and I hope your life is full of green candles. Take care. I'll talk to you soon.